Good morning. I'm Josina Kamerling, Head of Regulatory Outreach for EMEA with the CFA Institute, and it's my great pleasure to be with you today, albeit from a distance. You're talking the whole day about ESG, green bonds and sustainability and what it means for the investment management profession. We at CFA Institute in the Brussels office, we've been very actively involved in this since 2015. As a reminder, in 2015, CMU came into being. CMU was all about a couple of initiatives and looking to establish a capital market for the European Union. And ESG merited one sentence. Scroll fast forward and we get to 2018 when ESG suddenly became the hot topic for the EU. Now, why is this? We have to look to the high-level group on sustainable finance, which in 2017 looked to sustainable finance as an essential part of reconnecting society with the financial services. Financial services not for the short term, but for the long term. It was important to make sure that the markets could develop in a sustainable way and to get retail investment back. At CFA Institute, we've done researches on the investment firm of the future, a study which came out in 2019. And this spoke about joining up investment thinking, identifying client needs, clearer, higher standards and purposeful, adding value beyond. All of that speaks to the sustainable finance agenda and to what the high-level group said. We did an Esg Global Survey with our members in 2017. Clearly, 75% of our members take ESG into account, but the way in which they do it is quite different. Furthermore, ESG is massively applied in equities, but far less so in bonds, hence the need for green bonds. There's also an appearance that respondents take ESG into account because of investment risk. But when they have to look for the information, they look at it on public websites, through financial information, reports of the company, third-party research. But most of them, 3/4 of our respondents, think that board accountability still is the major issue for them when they look at an investment. There is a lack of comparability. The high-level group on sustainable finance identified this disparity and this fragmentation. How to approach an EU-wide system. Now, this comes out in the EU proposal, which really looks to establish uniform criteria, uniform disclosures, technical screening, which is similar, through a taxonomy. The European Parliament took the bit between the teeth and actually went much further than the European Commission. But this is because there's an identifiable need of reconnecting society with finance. The European Parliament has understood this in the past 5 years. There is also a need urgently after the Paris Agreement to look at climate change. We have 10 years to do something. As Greta Thunberg, a 16-year-old says, you have to do something. I can't, I'm a child. We have our children's future to think of. CFA Institute, in its mission statement, wants to look at finance for the benefit of society. This is a key issue for us. We have an ethical part of our charter. We want to create value for society. We think of the future generation. So all these discussions are key for us at CFA Institute. Now, in those proposals on disclosures, on the taxonomy framework and on the benchmarks, there are many discussions how far it should go. Should there be negative screening or not? Whereas disclosures and the benchmarks regulations have been adopted, there's still some discussion on the taxonomy. How far should this go? And within these discussions, of course, comes the topic of green bonds. The EU Green Bond Standard is a voluntary standard. The special group within the technical expert group on green bonds looked at the way at which a voluntary standard could develop the market. Key issues in that is that liability regimes for bonds, specifically on the prospectus, are still very different in each member state, but bonds are typically a global issue. How to come over also the fact that for a green bond, we might need a specific prospectus. Is this going to be additional information? Do we want to get retail investors in? In that case, should we not then think of a lighter regime? How far should we go? This was a heavy debate at a recent meeting at the EU Commission. And between lawyers, between stakeholders, between the stock exchange, there's a lot of discussion where we are trying to create lighter regimes for SMEs, for example, with an SME-specific prospectus. And we're trying to increase transparency on information for retail investors. We then create a very complex green bond prospectus with a lot of clauses in it because, of course, of the liability regime. So these are technical issues that need to be addressed. But as someone said, within 10 years, green bonds will be mainstream. So are we creating much ado about nothing? Should we let it be a mainstream bond prospectus as per, and maybe have some additional comfort from a letter or a verification procedure? So these are the questions. We know that at the EU, sustainability is going to be across all legislation and is going to be at the very heart of trying to reconnect finance with society. This is key. This is a key issue. We want to get retail investment back on board. For the next 5 years, retail investors are going to be the key issue for the European Commission. They need protection, but they want to invest in something they believe in. Because as we have also seen, the other big topic for investment management is the transparency on costs and charges. Now, we also need to address that, and the sustainable agenda comes right into that, creating this transparency, this dialogue between the asset manager, the company, and the investor. Thank you very much.